As we approach the end of 2025, the United States is experiencing a notable resurgence in energy demand, particularly in the electricity sector. This growth highlights the continued critical role of oil and natural gas in supporting our economy, industries, and energy security. According to the U.S. Energy Information Administration's latest Short-Term Energy Outlook, released on December 9, 2025, U.S. electricity generation from the power sector is projected to increase by 2.4% in 2025 and 1.7% in 2026. This marks a significant shift after more than a decade of relatively flat demand, with record levels already achieved in 2024. The primary drivers include the rapid expansion of data centers, largely tied to artificial intelligence and other high-load applications, along with the ongoing resurgence in 2024 manufacturing and broader electrification trends in transportation and heating. Regions like the Electric Reliability Council of Texas and PJM interconnection are at the forefront of this surge. ERCOT demand is expected to rise by 5.0% in 2025 and 9.6% in 2026, while PJM sees steady growth of around 3.3% in both years. Natural gas remains the dominant and most reliable dispatchable fuel for meeting this variable demand, as it can quickly ramp up or down to complement intermittent renewables. Turning to natural gas prices, the recent cold snap in December has influenced near-term forecasts. Henry Hub spot prices are now expected to average nearly $4.30 per million British thermal units, MMBtu, this winter, November through March, up more than 40 cents from the previous outlook due to elevated space heating needs. Looking further ahead, prices are projected to moderate to around $4 per million British thermal units in 2026 overall, supported by rising domestic production, forecast at approximately 109 billion cubic feet per day, and milder expected weather early next year. These levels reflect a healthy market response to strong demand from power generation, industrial use, and robust U.S. LNG exports, which continue to position America as a leading global supplier. On the oil side, the market faces short-term dynamics of abundant supply. The EIA forecasts West Texas Intermediate (WTI) crude prices to average around $65 per barrel in 2025, declining to approximately $51 per barrel in 2026, influenced by global inventories continuing to build. U.S. crude production is expected to reach about 13.6 million barrels per day in 2025 before easing slightly to 13.5 million barrels per day in 2026, primarily due to trends in the Permian Basin and responses to lower prices. Meanwhile, the International Energy Agency's December 2025 oil market report indicates a projected global surplus of roughly 3.8 million barrels per day in 2026, down slightly from prior estimates, driven by non-OPEC Plus growth outpacing modest demand increases. While this suggests near-term downward pressure, such periods often set the stage for tighter balances later as inventories adjust and investment responds to market signals. Ultimately, this demand strength underscores why oil and natural gas remain indispensable to American prosperity. The sector supports millions of jobs nationwide, contributes trillions to the economy annually, and enhances energy independence by keeping substantial revenues domestic rather than flowing overseas. In an era of geopolitical uncertainties, reliable domestic production provides affordability, security, and the foundation for continued economic growth. As we look toward 2026, policies that support responsible development of these vital resources will help ensure the United States capitalizes on this energy momentum. What are your thoughts on how these trends will shape the year ahead? I'd welcome your perspectives in the comments. Thank you for watching, stay informed, and I'll see you next time.